Invest in the future of AI with these 3 high-quality dividend stocks. Looking for a low-risk way to invest in the future of society like high-quality stocks that pay safe growing passive dividend incomes, also like the idea of being exposed to the coming megatrend of artificial intelligence? Then you have to check out today's video. Welcome to our channel that provides helpful videos on finance, investing, and earning more money in order to be independent and escape the financial system that has been binding us for ages. We do not provide financial advice, and anything that is said on this YouTube channel should not be seen as financial advice. These are biased opinions based on knowledge and personal experience. You should always understand that with investing there is always a risk, and do your own research before making any investments. Before we get into today's content, please give us a thumbs up if you value our videos. Machine learning, AI automation. The future is upon us, from smartphones to robotic production lines to drones. Human life and machine life are becoming more intertwined and dependent on one another. One of the biggest coming changes is AI and how it's going to impact how we work, play, learn sharp, and communicate. Change is always scary, but it can also be very exciting and profitable. Indeed, there are a number of companies out there heavily investing in AI because they can perceive the future profits to come, and investors can gain exposure to AI by buying shares in these companies. Investing in the fringes of technology directly as an individual is very risky. A much lower risk way to play this is to invest in high-quality dividend growth stocks with AI exposure. These have been great investments for decades before AI. AI just gives us that much more of a reason to invest. Today, I want to tell you about 3 AI stocks paying safe growing dividends. These are fantastic businesses that already have lengthy track records of reliable rising profits and dividends. The exposure to AI only bolsters their investment appeal. Let's dig in. The first stock I want to tell you about is Apple Incorporated, stock ticker AAPL. I've repeatedly called Apple a must-own stock through serious dividend growth investors, and its AI exposure is just but one of many reasons for that view. Ever heard of Siri, the tech company's AI-based voice assistant? That's the consumer-facing, easy-to-understand version of AI, but Apple can and will go much bigger and deeper than this through in-house development and bolt-on acquisitions. Apple is slowly paving the way toward a future where things like AR and VR are as commonplace as smartphones are now. They recently committed to $430 billion in U.S. investments over the next 5 years, and they specifically mentioned AI as one of their key areas of focus. Apple is a no-brainer long-term investment for both AI and growing dividends. Apple has already increased its dividend for 10 consecutive years, with a 5-year dividend growth rate of 9.7%, with the company's net income in excess of $70 billion over the last 12 months, and the dividend only costing them about $15 billion a year. It is practically a lot for increasing dividends over the coming decades, and that's on top of continued investment in AI. The crazy thing is that the stock doesn't look outrageously valued despite Apple's position as the #1 company in the world by market caps. The valuation isn't totally out of line. The price-earnings ratio is slightly below 30. If you want to sleep well at night while you collect safe growing passive dividends and also be invested in AI, Apple is one of my best long-term ideas. Stock number 2 is Emerson Electric, code stock ticker EMR. Emerson Electric is the perfect example of an old school meets a new school. This old school manufacturing and engineering company is a dividend aristocrat with 64 consecutive years of dividend increases, which is one of the longest dividend growth streaks in the whole world. And it's even a decent income play here with a yield of 2.1%. Their 10-year dividend growth rate of 4% won't knock you dead. But there could be a growth acceleration in store for shareholders from new cool investments. This company has been heavily investing in areas like automation and machine learning. And those investments have been panning out. Free cash flow for the most recent quarter was up 48%, earnings per share increased by 11% year over year. This dividend aristocrat has recently found new life by adapting to exciting new changes around automated manufacturing incorporating data analytics and machine learning into the improvement of processes. The stock is up more than 70% over the last year, far outpacing the market. The future looks bright for this company, so better put this dividend stock on your list. The third stock I want to highlight is a spec stock that has become really attractive lately. It's definitely risky. The company's name is Palantir Technologies, ticker symbol PLTR, which is primarily a data analytics company that gathers and processes large amounts of data to help the user make smarter and more efficient decisions. A lot of times, this is used for the US government and its military. But just to give you an example, they recently signed a contract with the US Army worth over $800 million to replace their old combat intelligence system with a brand new one consisting of various hardware and software that will allow the commander to better visualize and understand any threats or other relevant aspects or things that are on the battlefield, or the operational environment. It also helps regular businesses as well. They manage all their data, and they help them improve their efficiency, especially in their supply chains. So how does AI fit into all of this? Well, Palantir uses artificial intelligence and machine learning to basically analyze these massive amounts of data and then make decisions from it that humans wouldn't otherwise be capable of doing, maybe in the same amount of time or at the same efficiency level. For example, Palantir software will dig through the dark web to find weapons trafficking or financial fraud. It'll analyze biomedical research to discover new drugs for humans. It'll use censored data from the internet and provide better surveillance. It'll experiment with a huge amount of simulations to see what the best options are. The list just goes on, and we think that these are all areas that will experience huge growth over the long term, and growth is exactly what you see in Palantir's financial sales, which continue to soar by around 30 to 40% a year. And management expects the growth to continue by at least 30% a year through 2025, but because of the lack of profitability and the fact that losses have been almost as much as their sales, as well as their most recent quarter missing expectations, the stock has been getting crushed in this current market environment, where investors are, justifiably becoming more risk-averse because of the struggling macroeconomy. But at this point, we're talking about Palantir is trading at some of the lowest levels we've ever seen and down over 60% from its 52-week high. So maybe it is a good time for investors. That was all for today's video. Thanks again, and make sure to subscribe if you want more tips on how to grow your wealth. We hope to see you in our next episodes. Goodbye, and take care.